market news now. Global stocks are lower with bond yields dropping as investors assess the latest weak economic data out of China and looked ahead to a key inflation reading from the US on Thursday. Eurozone bank stocks fell sharply after Italy approved a 40% windfall tax on lenders for 2023. And Moody's cut the credit ratings of several small and mid-sized US lenders. Meanwhile, Chinese inflation data for July is due tomorrow, and economists forecast that prices shrank 0.4% year-on-year. The prospect of economic stimulus from China's central government to reinvigorate a soft economy is still being contemplated by investors. However, to give us more perspective on the markets, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. I mean, you look at the data coming out of China and you look at the way some of these Eurozone banking stocks are reacting to the news coming out of Italy. I mean, is this a case of a mild, classic risk-off type of day?
Good afternoon, Anastasia, and to your viewers. Yes, a few unexpected surprises really hitting us at the back of the head this afternoon. We've had the release very early this morning about the trade data from China. These data points were negative, both for exports and imports, but I think they've gotten worse from what we've seen in the prior release, especially exports are down in the mid-teen and imports down 12%. I mean, really showing that the Chinese economy is really in the doldrums and really needs stimulus. And obviously that links to our own commodity market and activity in South Africa. And then, as you mentioned earlier, Italy imposing this 40% windfall tax on the interest earned by its banks, leaving some of their banking, larger banking players down 6 to 7%. Again, unexpected, but we've seen the same happening in Spain and Hungary. So our government is trying to kind of level the playing field between higher interest rates in the developed world and the pressure that consumers are experiencing, especially in terms of mortgages.
The one thing that also came out, I suppose, news-wise, when you look at our stock exchange news service, was Nedbank reporting their interim earnings. Share prices up 1.4%. Were there key standouts for you when you look at those numbers?
Yeah, good point on Nedbank. Results ahead of expectations at 11% in terms of earnings. Again, interesting enough, we're talking about Italian banks, but net interest income for Nedbank up 18% ahead of non-interest revenue. So higher interest rate, higher advances. And that's, we've seen higher credit impairment, bad debt charges at 57%, but costs very well contained at 7%. So that's driving profits in Nedbank, and the retail and business banking division with strong growth in customer numbers at 11%, also showing that it's been resilient activity in the retail and banking market off a very low base last year.
The one thing that is mentioned in that results release from Nedbank is the bank mentions that the first half of the year was a lot more challenging than initially anticipated going into 2023. When you look back at some of the market calls that have been made so far, which market calls are holding water and which are still up in the air right now?
Yeah, I think interestingly enough, most of us were not expecting the extent of load shedding that we've seen and the impact on consumer spend in South Africa. So I think here, looking at credit growth, one has to be careful to not confuse that with a bit of distressed borrowing. And we're starting to see that in terms of the bad debts in home loans and personal loans in Nedbank. So in terms of market call, I think while some of the data has held quite steady in terms of a lot of manufacturing companies have been able to hold revenue steady, I think the costs through administrative prices, through having to self-provision, whether it's for diesel or renewables, I think has really been a negative surprise in the first half of results.
When you look at the Reserve Bank, at what point do we shift the debate from, how high interest rates will be to how long interest rates will be this high?
Yeah, it's a very good question. Interest rates in South Africa have risen 4%. The repo rate, if you go a year ago. Bear in mind that I think there's symmetry in terms of what the Reserve Bank is doing compared to the Fed. The Federal Reserve in the US has increased interest rates over the last year also by almost 5%. So we started earlier. So if we go back from November, interest rates have gone up 4.5%. I think we're very close to the peak. I think the US maybe have one more hike, and we think maybe one more hike from the South African Reserve Bank. And then the question is, how quickly does inflation roll over and comes down? And that's the key question, especially for the US.
Right. Patrice, thank you so much for your time this afternoon. That is Patrice Rousseau, who's the Chief Investment Officer at Ashburton Investments. Let's take a quick break. When we come back, we'll have a look at more news.